Thank you for staying tuned to Talking Business. Now let's look at the revised monetary policy decision of the last MPC meeting of the CBN. I've been joined by an economist, Dr. Saze Iyua. Welcome to the show.
Thank you for having me.
It's always a pleasure. Good afternoon.
Thank you.
And happy new month to you. We're in June.
Yeah, half of the year going already.
Okay, not completely gone, but
Okay, yeah. We are just entering it.
yes.
At least you've seen it.
Okay, and we hope that it will be good for the economy of Nigeria.
Expectedly, hopefully.
Okay, now let's look at a new change to the Nigerian economy and how it's going to impact the Nigerian economy. Now, at the last NPC meeting, the CBN, for the first time in 16 years, actually increased interest rates.
Yeah.
But let's look at some of the major changes that were made at that last meeting. For one, MPR, which is monetary policy rate, was retained at 13.0%, and liquidity ratio was also retained at 30%. Now let's begin with the MPR.
Yeah, MPR, as you rightly said, was increased for a very long time. For the first time to 13%.
Yes.
Yeah, it was last increased to 14% to 2016. 2019, it came down to 13.5.
Okay.
Then because of the COVID,
Yes.
you know, in 2020, May, it was reduced to 12.5 from 13.5. Then September 2020, it was reduced to 11.5.
Okay.
So it has remained so since 2020 to this year. So that's 3 years.
Yes.
And that has been due to the fact that, as I said, COVID, and the CBN, even till their last meeting in March, alluded to the fact that increasing rates at this time, that was just March, 2 months ago, increasing rates at this time would hamper the fragile growth that the economy was beginning to experience. And so it was safe to leave it at that point. So I don't know what has changed between March and now. You know, they have given reasons. They've given reasons for the Russia-Ukraine war. They've given, but the major reason, I listened to the CBN governor, and he was saying that the Bank of Canada, the Fed of US, UK, and the European banks, central banks, have given guidance, that was his word, towards increasing rates. So I would want to think that it's more like a reactionary.
Yeah, it seemed like that was just to justify that the CBN of Nigeria is not alone.
Isolated, yeah.
Yes, in that light.
Yeah. That's just the whole justification for me, because when you look at the Nigerian situation, the Nigerian economy, it's still not enough time. It's still not, the time is not right enough still for an increase in rates, because all the factors that the CBN governor mentioned with respect to supply distortion, because that has been the major driver of inflation in the Nigerian economy. It's been structural problems, supply distortions, structural problems in the sense of access to funds, especially by startups, insecurity, farmer-headed crisis. That's what has propelled food inflation, which has been the largest component of inflation in the last 3 years. So those factors have remained. Forex instability, because Nigeria is we are not just a non-producing economy, we are not also just an import economy, we are a heavily import-dependent economy. Heavily, the operative term there. So all these factors have still not changed. So increasing interest rates, for me, I still think, I don't see as many as 2 advantages in increasing interest rate as much as the disadvantage. Even the Lagos Chambers of Commerce and Industry, Manufacturer Association of Nigeria, they've all kicked against the increase. But they have said that it's because other banks have increased, and so we have to follow. Because if you look at the really peculiar situations, what really has driven inflation, it has been the fact that we've had problems with Forex. Look at this last increase in Forex now, about 650, 660 in the last 1 week. It has been alluded to the fact that politicians have ambushed most of the dollars because of the promise that was held recently. We heard it before last week, and just immediately before the promise, dollar went as high as 607 from about 530, 550. And immediately after the promise, you see it coming down again. And I think this would affect inflation figures for May. We should be expecting something in the middle of 17% and above. So Nigeria has a problem. Our Forex is a major determinant of price in Nigeria. Forex it's a major determinant of price. So whatever happens to the forex market affects price, affects inflation.
Okay.
So we had dollarization of the economy by the politicians. Then you have speculators. There are people who they eat, they make a living from speculation.
Okay.
They could go as high to the extent of borrowing money from commercial banks. Most of the politicians, most high-placed individuals do that. They borrow money or they take as high as 100 million naira, buy forex. At the point of, let's say when forex was about 500 naira to $1, then they speculate, they keep it.
Okay.
Then when, just like now, you now have dollars selling at about 600,
so they
bring it out.
Sell.
So what happens? They've ambushed dollars that manufacturers should be using to trade at that time or produce. So there's now an artificial scarcity. Then what happens to prices? Prices increase. So an increase in MPR will not address any of this.
Okay. Yeah. Now let's address the issues that you've enumerated one after the other. Now you start by talking about how some persons speculate. They get dollars in large. They get very huge sums of dollars and then keep till the prices go up and they begin to sell. Now, I know that there are different windows through which you can access dollars from the commercial banks, forex specifically, because not just the dollars, but majorly the dollars. Now, from the banks, there are different windows that are open. Now, if you're an importer and you're an exporter, there are different rates that applies to you. If you need forex for tuition, there are different rates that applies. Now, I'm wondering, in a time where there is so much restriction on how much of forex you can access, how do such persons who speculate get those huge sum of forex?
So that's the big question about the economy. Without going to make indicting statements, it just shows that there's a cartel that runs all these things. There have been accusations of CBN working with politicians to get dollars out of the system and so on. So that's just where there are very illegal routes, illegal sources where this forex, because BDCs were starved of forex recently. We know that happened. Commercial banks give largely for school fees and traveling. So that's a good question to ask. So it means that there's a loophole somewhere in the monetary system. And you see, so it just goes to show that this will not, the interest in MPR or the increase in MPR in rates will not address that, because they are two exclusive mutually things. So even the imported inflation, we talked about imported inflation the last time, where the fact that countries like China, where we get most of our products from, they are experiencing energy crisis now because of the war in Russia and Ukraine. So energy costs have increased. So it means that their cost of production has increased. So whatever they bring here is at an inflated rate added to. So increase in MPR doesn't address that. So those are the worries I have. But at the end of the day, you see that the reasons why CBN gave was that, you might have capital outflow from the economy, because if US has increased their interest rates, UK has, then you might have a likelihood of capital, FPI, foreign portfolio investment, flying out of the country. But that's a good reason. But even when you look at US increased by just 0.25 basis point. That's about 5%. UK just about 1%. About one was about 150 basis points. That's very huge. And whatever the case, the foreign portfolio investment will not necessarily come. I don't. You remember JP Morgan, just last 2 months, he brought out a report where they delisted Nigeria from the list of emerging economies for sovereign recommendations. So what that JP Morgan is an index, it's a list. So investors go to reference it. It's the biggest, they are the largest financial advisors in the entire world. So they delisted Nigeria from that list. So what that means is that investors are going to be wary. It's a red flag. So investors are going to be worried to put in their money here. So the foreign portfolio investment, which the interest rate is mainly targeted at, so that we don't lose it, we might end up losing it, because only now very high risk appetite investors will want to come in, because it will have been delisted.
That means this is a no-go area at all for investment.
That's just it. It's a red flag. And it also would hurt us, because of recent we have been getting most of our loans from the Eurobond market. Just 2 months ago, March, we got 1.25 billion from the Eurobond market. So we are about to apply for 950 million next 2 months. It means that the cost of borrowing is going to be higher. Because what it means is that when the risk is higher, the cost of borrowing is definitely going to be higher. So we are now going to get that 950 million at a higher interest rate. The 1.25 billion will go in March was given to us at just 8.37%.
Okay.
So now we are going to get, it's definitely going to be higher. And the reasons why JP Morgan gave was simple, because structural problems that we've talked about. The worry was that now that you're having increase in prices, increase in oil prices, for Nigeria to be gaining, our forex is reducing, our forex reserve is reducing, our debt service is increasing, government revenue is dropping, you know, inflation is increasing. So that means there's a problem with an economy that is oil producing, having all indices going negative when it's supposed to be positive. So it's a red flag. It means that if investors come and invest, their capital might be tied down here, because when they want to now take because they are not going to leave their dollars, at some point they want to take it. Okay. Then they will now be exchanging at probably 800 naira to a dollar. That would be a loss, because an investor who brought dollars here at 500 to naira to a dollar, then when he now wants to buy, he's buying at 800. So he has lost about 300. Okay. So that's the risk that most investors will be worried of. So I don't know what the sense behind the MPR.
But let's look at the local benefits. You talked about worried about the sense behind this increase. Now, the CBN Governor Godwin Emefiele actually admitted that it's contradictory, because why they were worried that the increase in the interest rates might hamper GDP growth, but they talked about it being beneficial for savers.
Savers. That was also. That's the theory. That's the theoretical expectation. What the textbook says. Generally, that's expansionary monetary policy. It means when you want to mop up liquidity, you increase interest rates. You know, you increase interest rate. Then what it does is that it encourages savers, because you now have increase in fixed income, your treasury bills, treasury certificates. So it's expected that people want to save higher. But that's why I said there's a contradiction. The Nigerian situation is peculiar. Our problem is not, our inflation is not driven by too much money pursuing few goods. It's not demand pull. So it's when it's demand pull that you say, when you increase rates, people want to save. But the problem is that there's no income. Disposable income is still very low. So how do you increase savings when disposable income remains low, inflation is still high? So they are not going to save from any, they are not going to steal money to save. But
an increase to save is further weakened.
Exactly. It's even weakened, because an increase in interest rates will definitely lead to an increase in cost of funds. You understand? So because most of these investors who are supposed to get funds will now get at a higher rate, which means that it would affect investment. Their investment will drop, because cost of borrowing is now higher. It would also drop productivity. And most likely it will lead to loss of jobs, even an increase in unemployment. So you see that it's a supply, our problem is a supply system, forex problem, insecurity. I don't know if you listen to the experience of the pilots of the Methodist Church. It's all over online. It's all over social media, when he gave his experience in the hands of kidnappers and so on. So you can imagine an investor, a neutral investor, listening to that. He doesn't need to think 2 times before he comes.
So if I get it correctly now, your thought is along the line that addressing the structural problem would have been better than for the CBN revising upward the interest rates.
In fact, that's the cause. It's structural problems, insecurity, farmer headers crisis, which has led to the food inflation, insecurity, which has led to FDI leaving our country, accessibility to funds, forex problem. Those are the major issues. Customs, those are the supply distortions that have been causing our inflation, not necessarily an increase in demand. So when you are not able to solve all those, increasing interest rates would even be hurting economic growth, as I said, because investment will reduce. You get so. Are you now looking at supposedly addressing inflation and hurting unemployment? Is that a better option?
So
or even hurting economic growth?
Really, if you look at it,
it's really not. It's really not. You still have. We still have. I predict that, just like how we said, when BDCs were starved of funds, where we moved from, I predict that it's going to even lead to higher inflation, because when you do all this, as I said, when investment drops, productivity drops, it means that prices will increase, because the investors have reduced. It means that their output has reduced. So you now have more demand to less supply. So it will lead to further increases in price, higher unemployment rates, fall in purchasing power, because some people are now out of jobs. Then even the banks too. I would have expected that when interest rate was increased, CRR was left
at
constant.
30%.
Cash reserve ratio of the banks was left constant. So it means that you have, what CRR means that the banks, the amount of money that these banks are supposed to leave with the central bank, it was increased in, I think, 2020 from 22.5 to 27.5. So when you are saying that banks should bring more to the central bank, it means that they have less to give out, to borrow out. Then you have now also increased interest rates.
That should have been reduced as well.
Yeah, so you are reducing the CRR, then you are increasing it. So it sort of balances up so that they have more funds to give. Yeah, because if you leave it the way they are, they seem starved now. They have increased their holdings with CBN. Then you tell them to increase interest rates. So you are going to have artificially high lending rates.
The ends.
Yes, exactly. On both sides. Yeah, that's just the point. Yeah, you are tightening it on both sides. So you have told them to increase their reserves with the bank has been increased since 2 years ago from 22.5. Then you are now telling them to increase interest rate. So you are going to see a situation where the banks might just take the safer routes. Because we expect that with the increase in MPR, fixed income will increase for TB, treasury bills, treasury certificates, and so on. So the banks might just take the risk-free route of just investing in government securities, investing, getting their cool returns, instead of giving to lenders, to customers at the increase. Because you remember that the banks are also in business. They are not NGOs.
So they may even have more bad loans.
Exactly. So that's what they are trying to avoid. So they are in business. They have staff to pay salaries and so on. So we will have artificially, when MPR was 11.5, lending rate was about 25% already. So with this increase, we are going to have an artificial shock. Since their CRR was left the same way, we might have as high as 30%. Yeah, because they, as I said, they are in business. They want to make money to keep their staff. You don't also want them to sack. 2020, when the CRR was increased from 22.5 to 27.5, if you remember, that was the time when there was large loss of jobs in the banking sector.
And we don't want to repeat it.
We don't want it. We don't want it.
We're out of time on this discussion, but I think we can leave it here for now, because the good thing is that there are more MPC meetings that will come up. So by the time the CBN watches and see how this decision they've made plays out on the economy, who knows what would happen at the next monetary policy committee meeting of the CBN. Thank you very much, Dr. Sazayua, for being on the show and giving much insight into the discussion today. All right, we'll take a break and then we'll return talking about the potentials of renewable energy. Don't go anywhere, because we have an energy expert that will come on the show.